Is August 2nd, 2018, and it's pretty much 9 a.m. in London when we're doing this. We're going to take a look at the markets as we usually do at this time of the day, provide you guys with a quick update on Eurodollar, Bitcoin. We're also going to take a look at the DAX and commodity markets such as gold and crude oil. Before we start, as always, I need to stress that trading financial markets unfortunately is risky and we may lose all of our invested money. Please note that there's that risk disclaimer statement here at the very bottom of the page. Make sure you read that, especially if you are new to the market. Now, what you could do now, if you want to, is you can join me in the chat box. You can say hello or ask any questions. Good. So let's get going, and we're going to begin with the euro. And the euro is trading slightly lower today. The Central Bank of the United States of America yesterday, the Federal Reserve, did not make any major changes to their outlook. But something I found really interesting, which is not necessarily linked to the Fed, is that, as we know, GDP growth increased with 4.1% in the US in the second quarter. Now, the third quarter estimate for GDP by the Atlanta Fed GDP Now model is for GDP to print 4.7. What's interesting is as well is that at the last estimate, the same model underestimated the growth of the US economy. Now, I'm not saying that the economic growth is going to be 4.7% in the US, but what if it's closer to 4? Then you would have, again, two very strong readings, pretty much at 4% growth GDP or GDP growth. And that is interesting because the Fed themselves have an estimate of around 3%. And actually, yeah, 3%. The upper estimate, technically, is around 3% for the end of this year. So you will have two readings where GDP growth is higher than their upper projection, because they'll have a band of where they think GDP growth is going to be. So with that in mind, it's quite likely, I think, that the Fed, if we have another strong reading in the next few weeks or months, that they're gonna be hawkish. And you need to remember, the Fed, they have access to more of these models that Atlanta Fed has, and they have access to other quantitative measures and systems to know the state of the U.S. economy. So undoubtedly, I think they're gonna be more hawkish, and they're gonna try to let us know beforehand. However, today there's not much to say. The euro is down with 0.28%, the pound is down with 0.33, Aussie dollars down with 0.40, and as well the New Zealand dollars down with 0.40. So you're seeing a bit of a dollar strength, but what you want to see here, you want to see a break to the June low at 1507. Until that happens, it's quite likely that this market will just continue to trade sideways. But if we take out the June low, I think it should hopefully be a relatively straightforward ride to the downside. I think 111 makes perfect sense with a stop at 113.12. Let's talk a bit about the pound, because today is the Bank of England meeting. So the Bank of England should most likely raise interest rates today. Last time I checked, the market is giving it a 90% likelihood of a rate hike today. This means that if they don't increase interest rates today, the pound is going to soften dramatically. At the same time, if they just increase interest rates because the rates markets are already positioned, then it's unlikely really that if they raise interest, it's unlikely that the pound is going to gain too much. But that doesn't mean that you can't have high volatility. It sort of tends to be the norm around the pound and pound events, so you can easily spike up or down. And what people are going to be looking at is comments about raising interest rates further down the line. And the way things look right now, there's not another rate hike anticipated until sometime next year. So this should be a one and done. Then they're probably going to take a break, and then they're going to revisit and see what's happening with inflation, what's happening with economic growth, and if the situation warrants, they're probably going to raise interest rates again, but probably not anytime soon. So this means that there should not be a major effect on the actual market, and I don't really anticipate a major change here to this pound dollar. The trend will remain bearish as long as trade below 133.16. Of course, traders that went short at 132, as I mentioned a few days ago, will probably have lowered the stop losses just to maybe 132.20. That way, they're risking about 20 pip. And if the market continues to go to the downside, then they have a bigger win. And if it swings to the upside, they'll have a loss of about 20 pip, which is not that bad. Let's take a look at Bitcoin. So this is Bitcoin, and Bitcoin declined quite strongly 2 days ago, and is still in the buy zone and still above the trend defining level, which is 7,202. Above this level, the trend is bullish, and I suspect the market could bounce to the upside. But the longer time it spends here, the more difficult is it going to be to take out this level. And it could unfortunately be a situation that we're going to be capped and this new high becomes a low like this one, sorry, a high like this one, and then the market tries to revisit the lows here. It looks to me, and I suspect actually, that we'll have more of that we need more of a consolidation phase, and then potentially at one point, we'll have some sort of a breakout maybe later this year. Obviously, if we do something like this, then probably heading higher like that. But for now, unfortunately, things looks to sort of more sideways, but short-term trend bullish, so no reason to change the bias. Now, I'm drawing clues and from other markets. Like this is Ethereum versus the dollar. And Ethereum is the world's second biggest market for cryptos, and also world's second biggest coins. And it just had this break of what appears to be some sort of a bear flag. And with that in mind, this market is bearish, a general risk of actually trading a little bit lower. And you're not seeing the buying as you see in Bitcoin. You don't see that in Ethereum. This is Ripple. It's totally dead. There's not much happening here. Ripple can easily trade below its June low, and then suddenly you start to see selling intensify. Bitcoin Cash as well was on its path to trade higher, but it's now sort of stopped creating higher lows to some extent and probably trade more sideways. So it's not looking that encouraging. If we're going to have a bull market in Bitcoin, we should probably have a bull market in all the other markets. And we're not seeing that. Let's continue. Here's gold. And gold, as you probably have noticed yourself, you've probably seen it, or as just discussed actually, the dollar is doing quite well. At least in the short term, we have not breached any major levels. In the euro and Aussie and things like that, but here it's more likely that gold prices will actually trade to the downside and potentially take out support. The market is very close to this level here, and if we take out this level, which is 12.15, I suspect the market can decline to 12.04, maybe 11.95. And we also talked about a few days ago that sellers will probably sell up here. In fact, we talked about this setup already on the 20th. The stop loss was a little bit higher at that point. We almost got stopped out, but then the market moved back down and then up again and then down. And so far it's looking all right, but it's obviously a bit sluggish. Crude oil, West Texas, they're not really doing or reacting the way I wanted it to react. And when the price took out this high here a few days ago, I was suspecting the market would move to the upside, but as you know, we got stopped out here if one was long. And the trend, the very short-term trend, stopped being bullish as the price took out this low here. Going forward, I think this is probably going to be a bit more tricky. It looks to me that the whole market is in some sort of consolidation phase. Now, if we trade below 67.03, I suspect this market can reach 66. So I definitely suspect more weakness on the back of a break here, but I wouldn't get involved and start to short crude oil. This is the DAX, and remember the DAX, the market was trading up here, and I said traders are probably not going to be buying up here because of the residual ratio. I said probably we'll start to look to get involved maybe down here at the 50 level. We reached that 50 level today, and we just cut through. We don't have a single bullish candle of price action, and we are, however, now at support level. So I suspect traders might potentially look to rebuild a long position where we are, targeting the high and then maybe 13,000. The only challenge with this market is that overall trends, that there's no trend in this market, which means that it's much more difficult to trust these sort of moves. As always, if you want to buy stocks, I think you're better off looking at stock markets in the US because they have a more stable outlook. As well, I don't know if you noticed, guys, but we have a new guy here. His name is Harris, and he publishing content for us. And yesterday he provided us with an update on the Fed rate meeting about 8 p.m. and he publishes a lot of technical analysis and things like that. So we have a new guy joining us. So today we have Nathan and Harris publishing content. So hopefully this is going to make the website better than it was before. And just keep a close eye here. You can find information, of course, searching here, and you'll find the different markets. But you can, of course, if you're just interested in the technical analysis section, just click here and you'll see there's a breakdown of short term and long term. And as I said, anything on the daily or like a multi-day outlook is long term, and a short term outlook, maybe on the 4 hour or 30 minute, is going to be placed here. These webinars are archived under the video reports. As well, you can click down here on TC authors, and you can find our sections. So, for example, if you want to check what Harris has written today, you'll see his last 3 articles in this section here. It makes it a very easy way to find our content. Okay, it looks like I don't have any questions today. I guess I took everybody by surprise by actually starting the webinar exactly at 9 a.m. Usually we start a little bit later, so I guess that's one of the reasons why there's not too many people here. Or you maybe are at the beach. I'm going to be at the beach, but I'm going to work the rest of this week and all of next week. However, from Monday, August 13th, up until the 23rd, actually 24th, I'm gonna be away. So I'm gonna take about 10 days off starting from August 13th. But I'll be here all of this week and all of next week. If you're watching a recording, don't forget to hit that like button. It's very straightforward. Click down here to like the video. Have a good day, guys, and I'll see you guys tomorrow. Thanks.